And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, fellow friends, future traders, family, and everybody. It's time for the market forecast. Thursday, July the 14th. As always, our focus is on accurate context, risk management, and patience. Patience, I think, probably paid for a lot of people yesterday. If you remained patient, looked for the right opportunities, you had a good day. I hope you saw that full moon last night. It was absolutely magnificent. It was a super moon. Full moon last night. It was hard to go to sleep. I almost felt like I was turning into a werewolf. It was so beautiful outside. It is also mac and cheese day, but our focus is on something completely different. As far as our economic numbers this morning, the jobless claims came out, as well as the PPI. Jobless claims, initial jobless claims, they were looking for them to remain at 235,000. They came out a little higher than that, 244,000. Continuing jobless claims, however, fell a little bit. They were looking for 1,383,000, came out 1,331,000. The PPI final, month over month, June, they were looking for 0.8%, came out 1.1%. No relief yet from inflation, ladies and gentlemen. U.S. stocks are ready to open lower this morning under the weight of that inflation. And getting no help from earnings this morning from JPM, missing on both earnings per share as well as revenues. Crude prices continue lower. There's a little bit of good news for us after the surprise from the EIA of a boost of 3.2 million barrels. You were all looking forward to getting some relief at the pump, of course. As always, make sure you like, share, comment, question, feedback, and heckling are always welcome, as well as love here on the Market Forecast. Subscribe to our YouTube channel. You can get notifications when we do go live. And we have the VIX up about 4% this morning, 28.02 dollar index back on the upside, 108.73, and the yield on the 10-year hovering just below that 3 level, 2.96%. It is Thursday. It is Make Hogue Money Day. Right after the forecast here, we're going to get into the Zoom room, and we are going to have you discuss trades and make money for me. Looking forward to it. Always enjoy these sessions. And yes, Charles, I did get the gremlin. I got the gremlin, but he attacked me last night on the forecast, on the recap as well. I couldn't tell if people were able to see or hear anything. We got it pretty much done anyways. So, good morning, Tachyon, first in the room. You win the prize. We've got Scott Saw, Annie Concord. My brother Rick is here with us. Love that. Love to see you. Hey, Rick, are you going to come join us for Make Hogue Money? We can hear your voice. Maybe we can have a little competition, little friendly competition. Shaw, good morning, Charles. Good morning, chilling with Dylan. Brian, James Swan, good afternoon. Terry King, JD, always good to see you, my friend. Theo, good to see you. Tachyon, consolidation of knowledge day today. You know, markets consolidate. We consolidate. I think that's a really good idea. You're not trading, just trying to stay as simple as you can to describe himself and his core mechanics of trading and layers above that. Yes, we all have many layers. I know I'm much like an onion myself. Dan Trader, good morning. George, good morning. Dimitar, Sarah Hall, good morning. Prayers and love to you as well. Brody, good day. Gerald, good morning. Jimmy Decker, haven't seen you in a while. It's good to see you. Michael Knight, Anne Marie, always a pleasure. to see you. It's me, Dave. Hey, Dave, how you doing? If it's your first trip to the forecast, thanks for chiming in and saying good morning. Hopefully, you're going to find something useful for the trading day today. DA Denise, good morning. Bob Rudder, good morning from Breakfast Taco Land. Andy, good morning. Orion, Rob T, Grim Reaper Trader, good morning. Charles, yes. Nicholas, good morning. Mike. Oh, that's very nice of you to say, Mike. I appreciate all of you. Could we get 125 basis point increase in current trajectory? Powell's words. Oh my goodness, that'll shake things up a little bit. Jan, good to see you. Hegel Matters, good to see you. Trading Research, William Hinson. Giuliano, Tyler, iPrint Money, I love that name. Nav, Chris, Anthony, and Mike again. Good to see everybody this morning. So we've got a lot to do this morning. We've got the forecast and make Hogue money. So we're going to get into the charts pretty quickly here. Let's start with the daily in crude. No, let's start with the daily in the S&Ps. Maybe we'll catch the open in crude oil and see if there's any early opportunities. Here's the E-mini S&Ps. So I had some relatively high hopes for an increase in open interest yesterday in the S&Ps. And we got it. We added about 8,600 estimated. And it was coming off the low, even though the range from yesterday was overlapping to lower, value was overlapping to lower. I think we added some new longs just by looking at the direction of the day time frame activity yesterday. We're still going to be kind of the sore toe effect today. With the information that's come out, it looks like that we've just kind of come into an area or a period before the open where traders and investors are digesting that information. It was not a huge move like it was yesterday with the CPI. We've got overnight inventory to the short side. There is a probability in the S&Ps that we could open with a gap. Now, we've tested to last week's low in the extended trading hour session, and as we all know, markets don't like to leave recent highs and lows in the overnight session. So there's maybe a good probability we'll get another test of our overnight low today. We've got our weekly kickoff low just below that at 37.25. So by looking at this daily chart, if we're looking at this market as range bound, there is opportunity down here for us somewhere between last week's low and the weekly kickoff low. There are some big fish. What side of the boat, we don't know. Our goal is to make sure that we only lose worms and we don't lose the rod and reel. So you're going to be offered some opportunities to limit risk down here. I'm going to again suggest trying to stay patient, look for some sort of structure to form in the day time frame, in the activity from today, before looking for any more substantial opportunities. Again, we're going to open with the gap with a relatively high probability, maybe. We got a little work to do to get us back into the range. If we do open with a gap and we can't break, we've got a whole lot of overnight shorts in this market ready to freak out and bring price back into range from yesterday. There is the possibility of a value area special situation play if we do open with a gap. If we can't continue lower, well, one of two things is going to happen. We're going to range along the bottom here, or we could bring price back into range from yesterday. An acceptance of value from yesterday increases the probability of reaching the other extreme of value from yesterday at some point in the session. So very important area for the S&Ps here, and you can just see it on the daily chart. We've been 1, 2, 3, 4, 5 days in the last 2 to 3 weeks where we've really come down and tested this area. It's just a It's just the extreme of the area of balance. Balance rules, we fade those extremes. We buy near the low, we sell near the high until proven wrong. When are we proven wrong? It's an acceptance outside of the current balance area or range, and we're getting that opportunity to see that today in regular trading hours. So I'm kind of excited about the opportunities that this day is already presenting. And we're going to be together for the open in Make Hogue Money to see if we can't find one of those opportunities. Actually, I'm depending on you to find that opportunity for me. So I'm trusting you with a lot, and we're going to work together to see if we can't find a good trade this morning. Take a look at crude oil. I saw somebody talking about they believe that the crude oil is set up to return to $60 a barrel. I hope he's right. Here's the daily. We're in the teeth of rollover. Okay, we're still in the August contract. Tomorrow morning, I will be checking very early in the day to see if we've moved our volume to the September contract. But today we're still seeing more volume, and we will see more volume throughout the day in the August contract. We'll check and see if we switch to September tomorrow or Monday. We'll be talking about that, of course, on the forecast tomorrow. We got to remember it's in the teeth of rollover, and volume and open interest are going to be a little blurry for us. Open interest overall, we added 6,000 contracts of all of the contract months of crude oil. We've lost 16,000 in the August contract, so we're starting to see the pace of rollover increase as we get closer to switch day and closer to expiration. Weekly kickoff low 92.50 might end up being in play today. We got relatively close. We were within 70 ticks of it in the overnight, and we've bounced considerably to open back above last week's low. We looked below it yesterday, and we closed back above last week's low. We're already seeing potential for the downside auction to either take a break or get a nice little pullback. Here's the 30-minute. Already we're seeing our overnight inventory reconciling. Here's settlement is up here, 96.30, and we're seeing, again, the reconciling of overnight inventory even before the open here. The overnight inventory short in the hole here. The first ones to bail are the last ones in, the laggards. The sellers that were late to the party early this morning are the first ones getting out. The more pressure they put on the shorts that have been piling in all the way down, the more likely we are going to go back into range and back into value. We are already back in range. We're not going to be opening with a gap. We're going to be opening in range. Or do we come back into value? So we've kind of missed our overnight inventory adjustment because it happened prior to the open. I don't think that we're looking for any really good opportunities because of that early in the session. So I'm going to move on and go on to the Nasdaq. We can go back and check if the opening range first minute offered an opportunity in crude oil in just a few minutes. So this is the Nasdaq. Similar but different. These markets, S&Ps are testing last week's low, where the Nasdaq is still relatively centrally located inside of last week's range, inside of the weekly kickoff levels as well. It seems that the Nasdaq is holding up a little bit better than the S&P, isn't it? We added 1,500 in open interest on the move from the lows yesterday. We got economic data that's very sensitive, and it's currently being digested. The first thing that I wrote in the Nasdaq here about the economic numbers today. It just says digest. I think these numbers are going to need to simmer a little bit before investors and traders make any decisions on what to do about them. We do have overnight inventory to the short side. Low probability of any gap occurring this morning. Settlements up here at 11,762 and a quarter, pretty much the high of the session. The low of the overnight session down here. Unable, just kind of consolidating, very just hanging around. There's nothing very directional in this little area of consolidation. So I'm going to try and stay patient if I'm a Nasdaq trader. We're in range, below value, but just the fact that we're in range after important numbers like this says I'm likely to find better trade locations as the day goes on. As the day goes on. All right. Let's go see if our opening range provided any good opportunity so far here in crude oil. It looks like we've left the opening range at the high of the session. Here it is. It's not presenting correctly here, but the high is 95.23. The low is 94.47. We got a huge opening range here. It's now taken out the low of it. You can see it on the 30. So it is rejecting range and value from yesterday currently as we speak. All right. Let's check out gold. We thought we saw buyers coming in yesterday, and the open interest drop of estimated 5,000 says no. We did not find buyers yet. We covered shorts yesterday. So the rally that happened yesterday is presenting as hollow. It did not bring in new business. It took out old business. Yeah, those hopes for new buying coming in yesterday completely smashed this morning when I saw the open interest. We're in rollover. So the open interest is going to start to get a little bit blurry. Our weekly kickoff low, 1,700, big fat round number, is certainly within reach. We seem to be heading that way as we speak. Weekly kickoff levels, what are they? The weekly kickoff levels are levels that we calculate where we believe longer time frame traders will either be forced to or want to adjust inventories. And when we can see longer time frame traders in the marketplace, it does a couple of things for us. It tells us to stay out of their way, and it also tells us when our short time frame direct competitors in this market might be ending up getting too short or too long in the day time frame. What are we looking at? Well, we've got a whole lot of overnight shorts in this market coming up to one of those important inflection levels. We can make an assumption due to the direction of price since the market opened last night that we've got a whole bunch of pea shooters, short time frame, weaker hands traders that are holding shorts. And right now they're very happy because they're getting continuation to the downside from the traders in the regular trading hours session. Oh joy, oh joy. We have to remember that this big fat round number weekly kickoff level is one of those levels where we may see an acceleration below it upon acceptance by longer time frame traders. We may find that this ends up being a low at some point during the session today if we get close enough. If we don't get close, I mean, everything is a zone. There's no finite letters, no finite numbers. And so, I mean, within $2 of an important level like this it's a touch. These are zones, and you think about, they're not really finite levels, but I do think when we have a big fat round number like this that's visualized and targeted by traders, if it doesn't get there, that's saying something. Okay, we opened, we're rejecting the range from yesterday, but we're up against a potentially difficult spot for continuation to the downside. I'll be watching this very carefully today. The euro, with the dollar continuing to push higher, we've got the euro holding below weekly kickoff low in large part. We've got 3 days where we've closed down below that weekly kickoff low. We lost open interest yesterday. Okay, that's a short covering rally, just like we said in gold. And this weekly kickoff level, I think, still remains pivotal for continuation to the downside or a failure of that and then a reacceptance back above that level to turn around. Nobody knows what's going to happen, and of course, anything can happen. ACH. Here is the Euro 30-minute chart. Here's weekly kickoff low resistance. A push to the upside, it's consolidation, and a close back down below that level. There wasn't enough time or volume to mark acceptance back above that level. We've got 1, we've got 2, we've got 3 days of the market settling down below that level. We've got overnight shorts, similar to gold, in range and in value. Gives me an opportunity to try and be patient, looking for better trade location throughout the day. Yesterday's range, I just messed that up. Hang on. Yesterday's range low can be an interesting spot for us, if only to be able to limit risk. 1, 2, okay. So, interesting spot here. Basically, we can look at this area here as an area of range. Low, high, low, high, low, high. Pivotal spot down here. Alrighty, let's take a look at the 10-year. Start with the daily. So we didn't really bring a bunch of momentum after our assumed bull flag here, did we? Market's not doing a very good job of moving higher. It's tested a couple of days up near weekly kickoff high, and it seems to be heading the other direction. Well, when we look at what happened yesterday on the 30-minute chart, boom, boom. It looks as though the additional open interest that we added yesterday is to the long side. Well, who's buying this knowing that rates are going to be going higher in 2 weeks? It's all, I guess, part of the yield curve. We're in range, we're in value. We've reconciled overnight inventory shorts a couple of times. I'm really kind of thinking we're in a repair area here. Point of control to the upside and this high volume node here. When we open in between these high volume nodes in a low volume area for an entire day, we tend to repair, which means we're going to spend time between point of control here and between point of control and this high volume node here to repair the profile from yesterday. It's almost like it's a broken profile because it's not wide in the middle, it's wide at the ends. When we open between them, we have a tendency to repair those areas. So, I'd be looking for value low for a potential execution and point of control at the top here for a possible execution. And neither of them may work, but I like them because what is it we always say? We have to find areas to execute where we can limit risk. That's our job. We are risk limiters that think we're traders. All right. Nat gas. We're getting a test of weekly kickoff high. Yesterday we added 3,700 in open interest. We are coming into rollover. We can't forget that. It's a couple of weeks away, so I don't think that the blur in the volume and open interest is that stark yet. So we got our test up to weekly kickoff high so far, showing signs of rejection. That open interest, additional 3,700 yesterday, is indicating a potential health to the upside auction, but we're going to have to accept below that weekly kickoff high before we're going to be able to do that. We had some overnight longs in this market. We've opened and we've rejected higher pricing. Overnight inventory, probably a large part of the sellers that have come into this market on the open. It's near an important inflection level with all the overnight longs not finding buyers. Maybe we're going to see some longer time frame sellers down below here. Again, this weekly kickoff level here offers opportunity to limit risk. Although we may have missed that already, all of our overnight inventory longs are currently probably adjusting those inventories, bringing price back closer to settlement or where the market opened last night, which is right here. What a crazy market this natural gas is. I don't know anybody that I know that trades it, but it's really just a really cool study of it's really a cool study of markets and how they work. Patrick, welcome. It's all right, you're late. We're not taking attendance. All right. So, all right. This is good. This is gonna give me a couple of minutes to get set up for Make Hogue Money. Again, here's the link. You can get signed up if you're not already. I'm looking forward to seeing everybody there. And looking for help. How are we going to make money for Hogue today? Brian Hardwork Hogan, good to see you. So let's take our deep breath. Remember to stay humble, grateful, and creative in your trading. If I don't see you before Make Hogue Money or later on today, hope you trade well. And be kind to yourself, be kind to others, say a prayer for world peace. Let's get out there and profit. See you in about 5 to 7 minutes for Make Hogue Money. Looking forward to seeing you all there.